Welcome back to the Daily Dip episode 3. We got a packed episode where we get to discuss how to maximize gains and reduce your losses in a market. Welcome back to the Daily Dip episode 3. We got a packed episode where we get to discuss how to maximize gains and reduce your losses in a market where the volume is dying like we're seeing here.
Hi, Hugh. This is your friend Vivi, the Bio Queen. So today I want to talk to you guys about the fiasco that was Onconova, ONTX, and what I learned from it. So to give a little background on ONTX, they had a phase 3 study that failed before, but there was a subset of patients that did really well. So I consulted a couple of my friends who were physicians, and I also talked to a friend of mine that is oncology rep for leukemia about Onconova. Funny enough, she was already on Onconova. She had bought some shares, and both the physicians and she thought was the next time around for this phase 3 trial is going to be a good data, because they took the people that did not do well in the study and just kept that subset of patients that did well. So everyone was really, really optimistic. So then I listened to the conference call of the CEO, also really, really confident. And the CEO was already talking about filing a new drug application with the FDA, preparing to file with the FDA. So I was given as that false sense of hope that we're going to get the data approved. So my plan was, after I listened to the conference, I added even more. So I added to 60,000 shares. I had an average of a 0.68 cents. And my thought process was, okay, I'm going to wait to see if we can get to have a run out up to the data readout, and I'll sell 80% of my shares, just keep some gamble shares for the data readout. But guess what? We got the data readout 3 weeks earlier, and that caught me and so many people by surprise. So, live and learn. My biggest advice is buy when you swing in stock and there's a data readout, buy 2 months prior and then sell a month before, because they said they were going to present the data September 13th at a conference, which also gave us the false hope that it was going to be positive, right? Because who goes to a conference to give bad data? So that's it. That's my lesson for today. We will have another swing tomorrow, I guess. So you guys have a great day.
Another episode of the Daily Dip. Dan, thanks for having me again, brother. Always a pleasure. Let's get right into this. So, the question of the day is, with the current volatility in the market, how can we capitalize on it? And what are the best ways to mitigate risk? All right. First off, we know that pennies have been slow in the month of August. They were running rampant for the last 5 months. They've taken some time to cool off. Having said that, what are we going to do? We're going to have to scale in and out efficiently. We're going to be reading the TAs. We're going to be doing everything we can to make sure that we're scaling in properly, making sure our entry points are at the possible supports, and we're going to be scaling out. We're not going to try to hold on and catch those multi-day runners because we haven't seen too many of them. We're going to be taking our profits a lot sooner. We've seen a lot of these stocks that run into the after hours and end up taking a dive pre-market the next day. And a lot of them have got offerings after hours. So we're going to be mindful of this. How are we going to mitigate that risk? We're going to have more cash on hand. I mean, we were running with about 20% cash for the last couple of months. We're now running anywhere between 45 and 55% cash. We're going to make smaller day plays. We're not going to try to maximize our profits. We're just trying to maximize our wins. It doesn't matter if it's a smaller amount. We want more wins. We want more confidence right now. We're also going to scale our swing trades. Even though you're picking up a play for a couple weeks down the road, maybe it's a biotech, it has some FDA approval coming up, you're going to scale in with a less of a size than you would normally. So that's the things we're going to do to mitigate risk. And by mitigating risk, you're going to be able to capitalize on these volatile markets. All right, guys, thanks for having me. I wish you all the best in trading. God bless.
Hey guys, how you doing? Mr. Prez back again for another episode of the Daily Dip. Gonna quickly talk about multiple time frame analysis, what it is, why it's important. Basically, you might hear it as the top-down approach, multiple time frame analysis, higher time frames. All it means is you start with a degree higher. Most people, day traders like to use the 4-hour chart. I like to start at the weekly, check out what's going on with the weekly, see if there's any patterns. With Microsoft, you can kind of see it's tested this level a couple times. So you draw your resistance. You see it's got a solid little support right here. It kind of looks like a rounded bottom, little breakout could be coming. You put a hammer on the weekly, followed by a close above that high. So things are looking good. So that you then check out your daily, see if there's any patterns that you can, notice. This just gives you a closer look. We've tested this, these highs, what, one, two, three, and we're coming up. Well, now we've come up to a fourth attempt at this level higher. So, and, you can draw your little uptrend support, and you can start to see that price is coiling into this potential wedge, breakout, ascending triangle, whatever you want to call it. How about, whatever your analysis leads you to believe. And then with that, you just drill down. You'll hear that a lot too. You drill down. 4-hour chart just gives you a closer look on the price action and how it's coiling into these levels. And even today, put in a nice reversal this morning on the 4-hour chart, completely engulfed that body and broke out. But what's important to do once you start drilling down is you look for smaller patterns within your larger time frame trend lines. So you go into your daily and you make that triangle, and you've got your, this is your larger time frame pattern. And you start with your daily chart, work your way down to the 4-hour, and you basically are just looking for patterns within your larger time frame patterns. So if you go from the daily to the 4-hour, you can pretty quickly draw this little trend line here by the breakout, towards the upper part of the higher degree pattern. And what you don't want to happen is you don't want these big extended moves up into these, daily resistances on without any kind of pullbacks. So you go down your 4-hour, you have this triangle here, it breaks, and then you're waiting for the next move. You go down into your 2-hour chart, 1-hour chart. You kind of put in a high and kind of see you have this little downtrend right here. And what happens here? It's just a pattern within a pattern. Breaks out to the high. And this is a really good thing right here, because instead of immediately pushing up to the top of this daily, you consolidate, get a nice 4-bar play, and just boom, blast off into the sunset. So multiple time frame analysis can kind of give you a hint on when the smaller time frames will attempt to push the higher supports and resistances, if that makes sense. Helps even on the hourly, helps see it a little better. On let's see, even the 15-minute, I'm sure this consolidation right here, you could probably find something to play on that too. Just anything that helps you see a pattern leading into a higher degree. Let's just see. Let's see, get that right there. It's not perfect, but little rounded bottom. And on the daily, just a quick little tip too, is notice how Microsoft closed into the strength today. Barely put in a top weight, closed at the highs of the day. And you'll see with that, you get huge push after hours. Like it's already up over $1 just in the after hour, taking out that daily resistance without having to worry about, market makers and this and that. All right, so just a quick review. Start with your weekly, daily, 4 hour, 2 hour, 1 hour, and then you draw your patterns and use the intraday setups to tell you when you're going to push up to the next, part of that trend, the next part of that pattern. That's really all there is for today's, feature on the daily dip. So feel free to check out my other intro videos and follow the Twitter. See you guys later.
What is going on, everybody? This is Thick Teddy. So I'm going to move into some of the swings I have, why I have them, and I have some charts to go along with them as to why I am bullish on them. Starting off, I have EVFM. This is Hugh Henney's play. All credit to him. I saw it from him first. This is kind of the pussy gel play. So it's going to be launching September 8th. And if you guys can see my chart right now, there's a gap at around a little over 350 all the way up to a little over 450. And they've tapped the 350 resistance twice now. And as you can see, the support channel is closing and squeezing. So we're going to push that 350 channel again. And the catalyst to push it through into that gap could definitely be the product launch on September 8th. So I'm really bullish on it, and I'm loading until September and product launch. The second one that I'm really bullish on is ARAV. And this company, they treat cancer by halting the transmission. So they will come in, they will halt the transmission of if you have brain cancer so that it does not spread anymore, so that the doctors can isolate where it's at and get rid of it. And the chart right here, as you can see, it traded over $10 for the last months. And then it's a low float. So I think the news came out and it wasn't quite what everyone anticipated. Wasn't bad news. It was actually good news. But everyone had anticipated it and kind of sold off. And then it was just a low float oversell. And I think we're going to see a correction. It started to curl up there after consolidating. But I have circled the death cross, bearish cross, whatever you want to call it. And I think we got a good dip the last few days. It went sub 580 a couple times. And I think we're going to see another curl up, and then it's going to start to really, really correct upwards because there's 4 pipelines. They all have catalysts within this year, by the end of the year. And I just don't see how it should be trading at a $6 stock. Lastly, we have BLU or blue. I've been trading this back and forth since the big drop off, and I know a lot of big traders have been as well. But right now, it just seems like the perfect time to get in. You can see the channel of support and resistance that I have on there, and you can see the consolidation that's been going on, and you can see the gap fill that it has over 450, I think, all the way up to $9. So they had bad news. They dropped completely, but they just have not corrected yet. And I really, really think any news will just absolutely send it. And the chart, I mean, look at it. It's beautiful. So those are my top 3 plays that I'm the heaviest in right now. And I think you guys can see the similarities between them. They were all stocks that were trading at a high and then a negative catalyst or something caused them to sell off. And now they're consolidating and they're ready to break out, whether it's due to a product launch like EVFM, whether it's due to different catalysts before the end of year, which is ARAV, or whether it's due to just a chart technical breakout. I've really taken this low point for penny stocks during this August to load up on these consolidating plays that I think could have extremely high upside as August passes and as we get through this plateau. And that's my strategy for now, is picking these bottom stocks at support and then letting the catalyst hit and letting them grow and taking the profit from there. That's all I got for today. Thank you, Dan, for having me on. Thank you, everyone, for listening. And I hope you guys all got something out of this.
Hey, so we're going to be talking about what happens when you day trade and how you can average up, average down, and basically run them. A lot of days, especially this month, because August fucking sucks, we're seeing swings just taking a beating, whether it's offerings or failed trials or what have you. Swings are just bleeding people. So everyone's looking to, day trade. They do what I call a Tinder, little in and out. A lot of people are asking, can you average up on day trades or do you just let your original position run? Now, I'd say there's actually two different sides to this coin. First is, yes, it's absolutely okay to average up on anything that's running. I mean, what you're doing is you're just adding to your position overall. You're not looking for just a little 5 cent jump. So if you average up a few cents from your initial entry, it's not going to matter because you're going to be 50 cents, maybe $1 ahead of anything. So averaging up in general is fine, especially on runners, especially on confirmations of breakouts and things like this. I know a lot of people are hesitant, but averaging up is great and it can increase your position size in a day trade that you plan on Tindering anyway. You're going to be in and out. You're just going to want a bigger position. Let's say you start a position with 500 shares, then it starts going. Do you just want to take that 500 shares or do you want to average up a little bit and take now maybe 1,500 shares? That's going to, all in all, it's going to end up really helping your bottom line because you added to your position size versus worrying about your average. Now, I'd say on the flip side of that, if you've already loaded large and you have a good average, then it's kind of, should I not? Yes, again, if you want to up your position size, don't worry about your average. However, if you're already sitting pretty heavy and something starts breaking out, then I don't think there's necessarily a need to average up. It's more about where's your position size, what position size do you care about, and are you already quote unquote full, meaning you've already sunk enough money into it, you're going to look for other opportunities to use your capital. So now you say, well, what if it's really running and it does some 250% thing like we've seen a couple of these things do? Again, it's a matter of what kind of capital do you have available? What kind of capital are you willing to put into a single play? What kind of capital have you already put into the play? Averaging up is fine. Nothing wrong with it, especially when something's really moving and breaking out. Now, a lot of people are also wondering, how do you look at charts? Like, what time frames are you concerned with when we're talking about day trades? I know swing trade times have been talked about already, longer time frames, longer swings. Now, day trades, a lot of people go with 1 minutes. 1 minutes can be okay to grab some quick information. I personally don't like them. They are extremely choppy, especially on anything that's breaking out, on anything that you're planning on doing a little Tinder with. So what I prefer are 5 minutes. It gives you a much steadier idea of what's coming, what's going, what's buying, what's selling. And if you match these with either higher lows and higher highs or very simplistic indicators like 9 and 20 EMA or a 50 MA, you can see these bounce. You can use VWAP too, but 9 times out of 10 on a runner, VWAP's going to be a lot lower than you would like to see it go. Sometimes things get what's called VWAP support, but you're not really interested in the support on a runner. You're interested in getting in, getting out, taking that green home. So I like the 5 minute, which can every single time show you a steady trend line, whether you want to draw it on a naked chart or you want to use a couple indicators. You can see a steady trend line, and if it dips below, or too far below, I should say, a steady trend line, then it may be time to sell for your profits, look for a re-entry on a decent bounce.
Although I'm not trading this week, EVFM had really good volume today. I said that 320 was the pivot point, We closed at 320. What I want to see tomorrow is better volume or consistent volume, and I want to see it consolidate around the 320 mark. Him too.